Well, Arvind Limited's revenue and EBITDA grew 11% and 24% compared to last year on the back of a higher growth coming in from the garment segment of the company. The company has also maintained its revenue growth guidance for the financial year 2020. To give us more details on the quarter gone by, joining us now on the show is Kulin, Lalbhai, the Executive Director of Arvind Limited. So, sir, to start off with, what is your assessment of the quarter gone by and how are things looking so far in the fourth quarter of financial year 2020?
So this was a very strong quarter for us. If you adjust for the one-time write-off that we had this year due to a change in policy from the government, we actually had a 13% growth in revenue and a 47% growth in EBITDA. So it was a very strong quarter for us, and margins in all the key segments actually improved. In our textile segment, the margins improved by 200 basis points. And in our advanced materials segment, which is a high growth segment for the company, margins improved by 300 basis points. Also, there was a very strong growth in our garments business, which has been another growth driver for us. So the garments business grew by 25% this quarter, which led to a strong overall growth. So all in all, in a tough environment, it's a strong performance for quarter three.
Okay. Other than efficiencies from your new garmenting plant, were there any other factors that aided the margin expansion in the third quarter compared to last year?
No, even in the textile business itself, there has been an improvement in realizations, for example, in our denim business. So I think both the improvement in the garment operations and fundamental improvement even on the core fabric business, both contributed towards an improvement in overall EBITDA.
Okay. So advanced materials segment, now that was growing at around 20% plus growth rate for the last 5 quarters. But in the third quarter compared to last year, the growth rate has moderated to around 16%. So firstly, why the growth rate has moderated in third quarter? Because earlier you had mentioned that the growth prospects for this segment was very strong. And also, how do you expect the growth to pan out going forward for this segment specifically?
I don't think it is correct to look at it from a quarter to quarter. That way there are different things that go into the dynamics every quarter. But we had indicated that the advanced materials business would be close to an 800 crore business in this entire fiscal. And we are likely to close very close to that. So we are the revenue growth is very much as per the expectations of management. And moving forward, we're very excited about the growth prospects of the business. We believe it will continue to grow at 15-20% year on year for many years to come. So it's a strong focus area for our overall growth strategy.
Okay. So any specific reason why revenues from the women's segment was down this quarter compared to last year?
So we have had a little bit of, a softer quarter when it comes to domestic. When it comes to the women's business, but we are expecting the demand to improve in the quarters to come, and we are seeing that segment also recover back towards growth in the quarters to come.
Okay. So cotton prices for the 9 months of financial year 2020 do look higher compared to last year, but I believe in the third quarter the prices of cotton have come down a bit compared to what it was earlier. So how are prices holding up currently?
So right now things are pretty fine, and we believe that in the months to come and the quarters to come, the cotton prices are likely to remain benign. There is enough supply in different parts of the world. So we are not expecting cotton prices to adversely move in the quarters to come.
And any kind of margin expansion that one can expect because of the reduced prices?
No, actually, our margins overall in textiles, have improved. And as we had indicated before, we expect them to come back to our historical, EBITDAs as we move forward. So I think we are moving towards that trajectory.
Okay. So in the third quarter, your debt has reduced by nearly 150 crore rupees compared to the second quarter number. But how much are you planning to lower it by the end of financial year 2020?
So we had, indicated that for the entire year, March to March, we would reduce the net debt by 300 crores. The peak was in July, from which already we have reduced 500 crores, and quarter 4 we would possibly be reducing again close to 150 crores, so that for the year we would have totally reduced debt by 300 crores.
Okay. So for financial year 2020, you have mentioned your growth guidance, that is revenue growth guidance at around 9 to 10%, and EBITDA margins are expected to be around 10%. Now, back of the hand calculation suggests that to achieve this target, your revenue growth for the fourth quarter has to be around 11%, and the EBITDA margins for fourth quarter have to be around 11.8% if you want to achieve that guidance. So is this number doable in the fourth quarter?
Yes, I think that is why we've shared the guidance with the market. We have good visibility into quarter four. So that is what we are confident of achieving.
And any factors that are making you so confident that you would be able to achieve this kind of numbers?
So we had already shared with the market that the second half of the year would be better than the first half. A large part of that was because our garment facilities, which were adding to our losses earlier in the year, are now stabilizing and contributing towards the bottom line. And in certain key segments, operating leverage is coming in, like the advanced materials business. And our core fabric business has been improving, when it comes to product mix. Our denim vertical has also stabilized and is improving. So all of these factors are going towards a strong quarter three, and that momentum we believe is going to continue into quarter four.
Lastly, sir, any growth guidance that you would like to share with us for the financial year 2021?
For the next year, we are still not put out a guidance. So for this year, we will be achieving close to a 10% growth.
Well, that would be all, sir. Thank you for speaking to BloombergQuint.
Thank you. Thank you.